Alix. Welcome to Bloomberg Commodities Edge, where we focus on the companies, physical assets, and the trading behind the hottest commodities with the smartest voices in the business. Let's get right to the data dig, where we look at the top market stories of the week. So even these bullish oil inventory numbers weren't necessarily enough to help oil prices. Now, crude inventories did rise by 1.3 million barrels, but that was less than expected, and exports really ramped up out of PADD 3. Now, there were some regional dislocations in terms of gasoline inventory, but there was a build that was stuck in the U.S. Gulf Coast. But there was a humongous jump in gasoline demand, plus diesel inventories hit the lowest of the year. Oil, though, still lost some steam. We'll get to that in a second. Now let's get to copper, because there are some signs that the metal rally's run its course. China keeps talking prices down, and copper is starting to show signs of sagging, and this is one of them. So here are copper time spreads, the difference between 1 and 3 months of price. Now, for the most of the year, there's actually been a premium of cash metal for over the 3-month forwards. But now it's actually flipped into a deficit of $28. That's the deepest discount that we've seen in nearly a year, and that trend tends to point to weaker demand. Now, if you want to buy copper, why aren't too expensive? Why don't you try aluminum? So Citi actually sees a deficit this year for aluminum on stronger demand growth. Now, it also sees stronger supply, but that might not actually last, because you've got supply constraints developing over the next few years. So the white line here is their balance indicator as we turn into deficit, and then the blue line is the price. They see prices hitting $3,000 a ton by the end of 2022. So now let's get into the ring, talk about oil, which is why we've seen oil lose some steam, and the particular fight around the nuclear Iran deal. Iran's President Hassan Rouhani says main issues, including removal of sanctions on his country's oil, shipping, insurance, and banking sectors, have been resolved. Joining me now is Golnar Mohtavali, who covers Iran for Bloomberg. Is this true? And if so, what happens now?
I think an element of it may be President Rouhani talking up the progress at the deal, because he's leaving office very soon. He's quite desperate to get the nuclear deal restored before he leaves office, because it was obviously a big part of his legacy, and he wants a victory like this so that his moderate allies will do well in the presidential elections. But at the same time, we've had diplomats from Iran, from the EU, from Russia, also sounding broadly rather positive. They are emphasizing the fact that there are issues that still remain, that they still need to discuss and come to an agreement over, that they have differences on. But they all seem to be kind of singing from a very similar hymn sheet, in that they're expecting to go back to Vienna next week, and they have been strongly suggesting that if the next round of talks next week goes well, it will be the final round of talks, and they will reach a final agreement to broker the restoration of that deal between Iran and the US. And obviously, when that happens, there will be more pressure, well, that's presumably on the price of oil, given that it's going to open Iran's supply.
Right. Well, that's exactly the question. I like the hymn sheet analogy. Also, it's like how much of the oil can actually come on the market, and how quickly is sort of that trillion-dollar question. What are you hearing?
Well, officials in the Iranian oil ministry often say that it takes them about 3 months to get back to that 4 million barrel a day level that they were pumping before sanctions, so just under 4 million barrels a day. So that's the kind of time frame we're working with. They're kind of sticking to a similar situation, and they're also priming their customers. We are hearing, and we have been hearing things from officials, both in Iran and also in the market, that they are talking to old customers, going back to those relationships. Obviously, we saw today some Indian refiners and customers were saying that they would definitely purchase Iranian oil once again, once that opportunity is open to them, when sanctions are lifted. So that's obviously where the focus of the market is going to be when it comes to Iran and oil over the next couple of months.
All right, Golnar, thanks a lot. Golnar Mohtavali of Bloomberg. Time now for Commodity in Chief, where we talk to one executive in the commodity world. And today, it's Thomas Healy, the founder of Hyliion. Now, the road transportation sector is responsible for 25% of CO2 emissions globally, and that makes up almost half of global oil demand. Decarbonization is going to be really tough. Now, EVs can help with passenger cars, but trucking, aviation, and shipping are still heavy-duty emitters with no easy electrification fixes. Enter Hyliion. It's a powertrain company. So right now it makes two quick fixes: a hybrid compressed natural gas and hybrid diesel system that can be installed on most major Class 8 commercial vehicles. The holy grail, though, is the Hypertruck ERX, which uses renewable natural gas to power the engine. So here's how it works. You pull in a natural gas refueling station, you plug in your truck, wait 8 minutes, and drive away. The natural gas is then converted into electricity to power your motor while you are driving. It's kind of like your own mini power plant on your truck. It also uses renewable natural gas from biowaste. That means capturing emissions from landfills, dairy farms, and putting them into the natural gas pipelines. Now, Hyliion says these engines can outperform a diesel truck to 60 miles per hour and are up to 35% less expensive than diesel. So I recently sat down with founder Thomas Healy to see just how fast these trucks can hit the road.
Electrification is coming into the commercial vehicle space. There's no doubt about that. And when you speak to a fleet, they're super eager about electric, but what they found is they need a practical solution. And, building out hydrogen fueling stations or, $30 million in infrastructure for electric recharging, things like that is just, it's not practical for them. And so that's where we kind of pride ourselves in having a very easy to adopt and low cost solution. And so I think, as we look at the years ahead here, BEV solutions are going to make a lot of sense for short haul local delivery. And then range extender solutions like our Hypertruck is going to be what wins in the long haul over the road market. So, we're really just at the kind of the start of adoption of electric vehicles in the commercial vehicle space. Passenger car has been doing it for a while, but commercial vehicle is really just starting. And so I think over the next 5 years, you're going to see a lot of kind of launches of products and then fleets determining which one is best for their operations, which one makes the most sense. And then from there, starting to adopt those solutions into the new trucks they're purchasing.
What's the adoption like? It's coming. When does it get here, and what does it look like?
To put some numbers to it, in the U.S., there's a couple million trucks registered that are driving, 100,000 miles a year, each vehicle. And every year there's another few 100,000 new trucks added in, or new trucks being put into fleets. And so as we look at this adoption to electric, fleets are going to try it first in low volumes. They'll adopt a few of them. They'll see what the actual payback is, what the ROI is. And then from there, assuming that the numbers all work, they'll start adopting that powertrain as their kind of go-to solution for the new trucks they're buying. And for a normal fleet, they're going to turn their trucks over between every 4 to 7 years. So that means for us, if it's a fleet that operates, let's say 5,000 trucks, every year they're going to be cycling out 1,000 of those vehicles. And then those are the ones that we're going after to be able to convert those over to having an electric powertrain.
How much does it cost to make all this and scale it? How much can you sell it for?
Our vehicle, with the chassis, powertrain all in, is about a $220,000 asset that we're selling it to fleets for. And, we're doing that in conjunction with the OEMs, because as we spoke about before, we're not the whole vehicle maker, we're the powertrain maker. And then, as we go and look at actually scaling this, one of the things that's unique about Hyliion is we're taking a pretty capital light approach compared to some of the other players in this space. So I'm sure you've seen some of the big announcements of players putting up, million square foot factories, right? I mean, they're doing a lot of capital intensive work in order to be able to scale their businesses. But since we're not developing the entire vehicle, we're really, taking our powertrain and supplying that to the OEMs to integrate into the truck. And so that doesn't require us to need that huge factory. So from that standpoint, the whole business model is actually structured in a pretty capital light approach compared to some of the others in the space.
Do you have an idea of when you're going to be able to turn a profit?
We've projected being able to turn a profit in the next few years here. I mean, in the beginning, it is still capital intensive, right? It is still a hardware product and one that we need to drive volume, scale up those volumes in order to be able to drive costs down. But we do see this as a solution that can very effectively switch to being profitable and, still being able to do it in a way where we can offer it at a low enough cost to the fleets that they're able to reduce how much it costs them to run these vehicles.
That was my interview with Thomas Healy, the founder of Hyliion. And today, Hyliion actually announced a partnership with Detmar Logistics. That's a Texas-based company that deals in transportation and logistics of frac sand. All right, now time for the commodity kicker. Okay, it hasn't happened since 2004, but finally that 17-year hibernation is over. Trillions of bugs known as the Brood X will claw their way up from the Earth's soil. The red-eyed black-winged cicadas are already making their spookish entrances in backyards from the Midwest to the eastern seaboard. The horrid yet harmless insects will sizzle with the sounds of mating season from their treetop perches, where for the next 2 to 4 weeks they will court, copulate, and fly around, hoping to avoid becoming a crunchy cicada snack. The buzzy bug is expected to be gone by late July. Yes, please. July, leaving humans to breathe a collective sigh of relief, and billions of little nymph babies that will again burrow and sleep deep within the earth for yet another 17 years. Catch you later in 2038. All right, here's what's on my commodity radar. Aside from cicadas, Exxon annual shareholder meeting is going to be next Wednesday. It's going to be a very interesting meeting, particularly in the wake of that new IEA report that said, quote, there's no need for investment in new fossil fuel supply in our net zero pathway. That's going to put some pressure on Exxon, particularly with the activist investors. So looking forward to that. That wraps it up for Bloomberg Commodities Edge. Catch me every Thursday at 1 p.m. in New York, 6 p.m. in London. This is Bloomberg.